Hello and welcome to our first video on equity investments. Let's start by stating that an individual saying that she invested in equity securities, or simply equities, is the same as saying that she invested in shares of stock, or simply stocks. Now an example of a share of stock, Starbucks stock. Specifically, it is listed on the stock exchange as Starbucks Corporation, and that's why this cob over here. Starbucks is an example of a publicly listed company, that is, its stock is trading on public markets. And I'm sure you can think of other companies listed on public exchanges, such as the New York Stock Exchange, for example. Apart from publicly listed companies, where the general public can buy shares of stock of such companies, there are also privately held companies. Their stock is owned by what we call private investors. There might be some trading of privately held company stocks, but not by the general public, as these shares are not offered for trading on stock market exchanges. We'll talk more in the future as regards who these private investors are, but as an example, a venture capitalist would fall into this pool of private investors. Simply put, venture capitalists are usually high net worth individuals, and by high net worth, I basically mean extremely rich. So as I was saying, these are usually high net worth individuals that after running an analysis, invest in those businesses that they believe have the prospects to grow and provide them high returns on their investments. Moving on from that, I want to make you aware of the fact that publicly listed companies were once privately held companies that underwent a transition from privately owned equity to public equity. That transition is achieved through what is called an initial public offering and is commonly referred to by its initials as an IPO. Now if you feel like I'm throwing a lot at you in this very first video, don't worry. I'm just following the same approach as in other module sections where I initially set the scene, and as I move along, I elaborate as well as build on what was previously stated. For example, over here that I mentioned the term initial public offering, we will of course discuss in a future video what it does entail, as well as the mechanics behind an IPO. But for the time being, I just wanna say that there's nothing complicated over here, as the name initial public offering is pretty self-explanatory. Initial, that is very first time, and add to that the words public offering, the very first time that the company offers its shares to the public. As simple as that. So before this clarification, we were saying that public companies were once privately held companies that underwent a transition. This doesn't mean though that being a public company is a desired state. There are certain advantages and disadvantages to being a publicly listed company. And in fact, a lot of companies, after gauging these advantages and disadvantages, strategically choose to remain privately held. 2 videos from now, we will discuss these pros and cons. Moving on to the next slide. Here I present an example of a company that might be close to you to illustrate what I previously said, and that's Facebook, listed on the stock exchange as Facebook Inc. Facebook held its initial public offering on Friday, May 18th, 2012. That's the date the company transitioned from being a privately held company to a publicly listed or simply a public company. Before that date, if you as an investor wanted to go out in the public markets and purchase Facebook shares, you wouldn't be able to do so as it wasn't listed on public exchanges. I'll close this video by familiarizing you with some financial jargon. I think it's very important if you are familiar with this language because it will allow you to start following financial news without getting intimidated, as you will actually understand what is being said and be able to make associations with other material you cover. So if you put on a financial news channel and hear somebody saying Facebook went public on Friday, May 18th, 2012, this expression is completely equivalent to this. To go public, or in this case went public, refers to holding an IPO and thus becoming a publicly listed company. Another expression that is equivalent to the 2 already mentioned is Facebook IPO'd on Friday, May 18th, 2012. In this case, financial professionals take this IPO and turn it into a verb, although in reality it is not one. Let's continue in the next video.